I think that the SPY is going to hit $388 by Wednesday, and I'm here to show you how, why, and where I came up with that sort of answer. Welcome to Trey's Trades, guys. It's great to have you back. It's your boy Trey. Good afternoon, evening, morning, wherever you are in the world. I hope you're having a great afternoon, evening, and morning. I wanted to discuss my thoughts on the SPY and on the broad market coming into this next week. We're going to be looking at the weekly time frame, the daily time frame, the 1 hour time frame. We're going to be looking at the VIX, the XY, options market data across the market, as well as economic events that are going to impact and influence the way that the chart moves. I'm going to be walking through step by step how I'm coming to all my forecasts, my analysis, and my levels that ultimately are I think actionable. And we were pretty good last week. If you look back on last week's SPY analysis video, the three big takeaways were that we would reject that $400, we would bounce off $390 immediately after that, and then we would come back up to $400. In which case I was short by about $2 on the last piece of that, which was the bounce from $390 back to $400. So all in all, pretty good forecasting, and I'm using the same thought process coming into this week as we look at things. So with all that said, I'm going to chapter out everything. So if you want to watch from the bottom of the YouTube bar, you can fast forward to weekly, daily, whatever stuff you want to look at, feel free to do so. Let's just get straight into the video. So let's start off here on the weekly time frame. Now, I think very important to start off with when we're looking at the weekly is what type of candlestick pattern we are even looking at, right? And this is a spinning top. Now, what is a spinning top? In case you didn't know, it's a type of candlestick pattern that typically indicates the end of an uptrend or a downtrend. A candlestick pattern such as a spinning top can be used in an uptrend or in a downtrend. In this situation, we're in an uptrend. It typically means we're about to begin a bearish move. But if we were in a downtrend and you got this exact candlestick pattern, it would typically signal the end of a bearish move and the beginning of a bullish move, right? But we got the spinning top set up, and its key characteristics is that nice topping tail, nice bottoming tail with a good meaty body in the middle of the candlestick, just like a sandwich, right? You want to put your bologna in between two slices of bread. The two slices of bread in this situation are the wicks, and that body is your bologna, right? Well, spinning top typically indicates, like I just mentioned, a little bit of a turnaround, right? A little bit of trend of reversal. Now, does that guarantee we're going to get that? No, not necessarily, but it does give us a starting point, right? Which is why I wanted to start with this on the weekly time frame. So now that we have this as an inclination and a place to begin, I want to now look at key levels, which I like to think of as pivots. Now, pivots are a little bit different than support and resistance. Support and resistance are areas where we know price is hard to break, and if you crack above it, you get a big move, right? Which is great if you're trying to play breakouts, but if you're not, well, then what, right? Pivots are better because they can indicate not only a breakout, but a major rejection down, right? And I've got a couple key ones labeled off. 390.03, this is one from last week. It should look familiar. This stays the same because we still have price interacting on weekly time frame, right? Rejection, 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 rejection. I'm very used to that back in the college days, let me say. So 390 stays, and then we've got four other major pivot levels on the weekly time frame. We got $400.18, 402.31, 405.33, and 408.16. And one of these major levels coincides with a 707 Fibonacci retracement level, which is $405.32. Off by about a penny. Now, if this is to play out exactly right, you could see us tap 405. We're not guaranteed to, but we certainly could. We could tap $405 and I think ultimately come back down. And this does make a lot of sense, just considering the fact that most of our rejections have come off of either 707 or 786 retracements, right? This lower high was a 707 tap. We're going to look at this one real quick just to see what that came out to exactly. This one was a 707 tap. I mean, you guys get the picture. They're pretty nice. They work pretty well, right? So 707 is like a magnet. I think eventually we're going to tap that level. Supply zones, we've got a major one here between 405 and 408 and 400 and 402.31. These are areas where I expect we are more likely to reject and come back down. Now, one big thing that I do want to talk about is I think we are going to tap $400 and come back down off of that because of something I'm about to show you on the daily time frame. But I want to start off with the weekly so we have really base horizontal levels to look for when we want to take trades, right? So now that we've gotten that, you know, I suppose the last thing I want to show on the weekly time frame is this descending volume. Descending volume in an uptrend like this typically would just show a weakening in strength with the direction, right? And you can see that the spinning top sort of coincides with that, right? You should not be seeing an increase in range on decreased volume because that's just not strong. That's not strong in terms of buyers, and the same can be said in sellers, right? If you saw a decrease in volume on an increase in range and a push down, right? I mean that sellers are losing their grip a little bit which certainly makes sense. So all that being said, I think these are the key levels. This is where I'm getting $400, 402.31 derives from this top right here on the weekly time frame. Then 405.33 and 408.16 coincide with wicks on these weekly candles, right? So you got these two supply zones. We got our major pivots. We got 390 as a major support / pivot. And we can work our way down to the daily time frame from here. I am going to hide some of this stuff and we can come back to it. But I just want to keep things nice and tidy so you guys don't get confused by anything that I am going over. So all that being said, now we can work into the daily time frame. And the daily time frame is exhibiting another pretty interesting candlestick setup, as well as RSI divergence. So let's just start off here with the candlestick. This is known as a bearish hanging man, and I want to show you this really quick. It can look a lot like a hammer in this situation. You know, the hammer, typically the candle would be green, but in a hanging man, it would be a red close, which is precisely what we got. Now, the only thing that I don't like about this is typically you want to see these in an uptrend. And while this is technically an uptrend, it's coming off of a little retrace move, which is really what leads me to believe we could see that 400 tap before ultimately pushing back down, as I mentioned before. And I'm going to show you exactly why I think that that is a high likelihood. But nonetheless, that is a bearish hanging man, which does coincide with the weekly candlestick pattern of a spinning top, which is a reversal signal, right? The same can be said on the daily time frame. This bearish hanging man would be a reversal signal, and we can expect some sort of push down, right? Another pretty interesting level, and the line here is thinner because it's not as significant as the weekly time frame, but it's still significant, is 394.88. Now, if you look at this, you've got 1, 2, 3, 4 different daily candle bottoms or tops that rejected off of this level. And I wanted to highlight this because this is an actionable level to me. I think you could go short on a break under this, or you could go long on a bounce, right? This is a very big daily level, and I just wanted to highlight that for anybody who's trying to take some trades because I do think that's going to matter. Right. Another interesting note, we do have 3 straight days of increased supply, but it's on equivalent range. Now, I've already checked this out, but you can do this for yourself. If you were to look at these 2 daily candles in the range of how high and low these went, right? The low to the high here is about 5 points on this day. It's 390.14 up to 394.95. This day it was a little less than 5 points. It was 393.04 to 397.81. We're just going to call them both $5 round even Steven. But the important thing to recognize is the law of effort versus result. Now, in this instance, what does that mean? The law of effort versus result is a Wyckoff theory. It's a Wyckoff method that typically means what goes in doesn't just magically disappear. It's the idea that nothing can be created nor destroyed, like physics, right? You can't just magically make that volume vanish. That had a purpose. Something happened when those orders went in on that particular day. But we also know that typically when you have more volume, you have more volatility, which equals more range. So why did we have equal range on a day where we had a significant increase in volume? We went from 74.5 million shares of volume to 92.9 million shares of volume. It's likely because this is distribution. And that is what the law of effort versus result is talking about within Wyckoff theory. Is the idea that when you have increased volume but the same or lesser volatility, you are likely watching buyers and sellers shift, preparing for either a mark down or a mark up. And in this instance, since we're sort of in an uptrend, and I think hanging pretty high in the trading range, I think you're preparing for a mark down. Right. And this is going to make a lot more sense when we look at the hourly time frame. But this is just some nice confluence, so to speak, this increase in volume while we have equal range, equal volatility. Just leads me to believe that that's a pretty likely outcome. So I want to discuss that. If you look at the RSI, you also have just a sneaky little RSI divergence, right? Friday to Tuesday, you're setting lower lows on or lower highs on RSI while you're setting higher highs in price. This typically would precede a markdown. This would be a hidden divergence that would say eventually bears are going to step up and push price back down, right? This is all the big things that I think were important on the daily time frame. One last thing I want to show you is just this 382 tap where we got sort of this nice bounce up. Now, it didn't quite tap exactly the 382, but I always like to think of the 382 as sort of the difference between a continuation setup or a correction. And what I mean by that is if you bounce off the 382, you're setting up for the opportunity of a continuation, right? It's very strong. It's a very strong move to bounce off the 382. But if you break it, it's typically more so corrective. And I would be targeting the 618 to then maybe start setting lower highs and push down in the opposite direction, right? Well, we bounced off the 382 pretty significantly. I mean, if you were to take a ruler and sort of measure this out, it was about a 2% bounce. And I think if it was to stop somewhere, it's likely going to be that 200 EMA. So that's why I said this is one of the things that I think is likely going to happen. I think we're going to test $400 or within $400 or close to $400 and likely reject there. If we don't reject, I think we're coming up to $405, which was at 707 back from the weekly time frame. But I do think we're going to. I think we're going to retest $400, and that to me is a spot where I'm going to be looking to go short. Specifically because of what is coming on the 1 hour time frame. Now, this is really cool. And I got to say, Dave's got some big nuts. Composite Dave, if you follow him on Twitter, he's a great follow. It's Dave Marino Jr. He talked to me one day. We chat all the time about lifting and stocks and stuff. And he was talking about apex points, which I always just called points of interest. If you look back on my weekly video last week, I had a couple key points of interest that actually hit. And there's some really nice ones coming into this week that I think are going to as well. And I'm going to take some bold predictions. That's why I think we're going to hit 388 by Wednesday. I want to talk about why. I'm going to show you why I think that and came to that conclusion. So now we can hide all these levels. And we can work with our hourly time frame levels. So I'm going to drop some eclipses. Just let me unhide all this stuff so we can go over it all and try to make it make sense. Now, in no way, shape, or form am I guaranteeing you we're going to hit these levels, right? I'm not a financial advisor. This isn't financial advice. Please manage risk accordingly, size accordingly. If you can't lose the money you're betting, then don't bet it, right? These are all things that we know as traders, but it's very high confidence. And one of these I've got a lot of confidence in, which is the 388 tap. So far I've made two claims. One of these is that we're going to tap the 200 EMA, which is roughly $400, and reject off of that. And secondly is that we're going to test 388 and bounce from that. And I'm going to tell you why. So if we look at the 1 hour time frame, I've got a couple of different fibs that aren't on the chart right now. I'm going to put them on one at a time so they don't get too muddy. But we're looking at a falling wedge type setup. You've got a falling level of resistance, a falling level of support that was previously resistance. You got a touch point right here, touch point right here. This is what's really key. Check this out. Tap and a tap here. Now, this tap is really clutch. It tells us that buyers are respecting this price level, which makes this falling wedge. Now, what's really cool about apex points, and to explain this in the most simple way possible, an apex or a point of interest is when you have two different data points that converge at a specific time. And if you find a bunch of data points that converge at a specific time, you can view it as a high probability outcome, because big money will also look at these levels and these points of interest, so to speak, these apexes, and say, let's base risk on this. Let's try and target that level because it just seems to make sense, right? Well, we've got two. So looking at this falling wedge setup, looking at the weekly saying, hey, we're likely bearish. We've got a spinning top. We also have a bearish hanging man. We're at the top of this falling wedge range setup, right? A rejection off this makes a pretty good amount of sense. Maybe you come down and you test the 200, you bounce and you come down. Regardless, right? This does make a lot of sense, and you've got two dates. And I'm going to actually say that I think this is going to happen by Wednesday. I think by Wednesday, we're going to tap $388 because we have three different trend lines that converge at this point, as well as four different fib levels that converge at this point. The trend line taps come from here, this trend line. We also have this trend line here, 1 touch, 2 touch, 3 touch. And then we've got this trend line, 1 touch, 2 touch, 3 touch, 4 touch, 5 touch, and then 6 touch at 388. I think it's likely going to happen by Wednesday at 11 o'clock. Is this guaranteed to happen? No. Is it possible? Yes. I'm going to be trading based on this. I'm going to be taking risk based on this. I think it's possible. And to tap $400, you would also need to break above this wedge, may I add. So the high probability outcome, if we tap 400 and reject off that, right, would be that you re-enter the wedge, and this is a fake out breakout. Is it going to happen? I don't know. I mean, it's possible. It's a claim that I'm making. I think it's highly likely, but we're going to watch regardless. So that's my second claim. My second claim is that we're going to hit $388, and I think that's pretty likely. And I would actually be looking to go long around 388 to then, ride it up about 3 or 4 points to the top of this falling wedge setup. Second point of interest. Actually, maybe I should show you these fibs because these are crazy. This fib is taking the high at 432, our low at the spring down here at 347. You've got confluence on the 0.5. 0.5 is square on the nutsack in the middle of this. Our next fib lines up at the high at 415, top of 415, low at the spring. And then you've got a 618 touch, specifically right there. Next one, $403.53, 362. You've got the 382, primarily right there. Last fib, I mean, I don't know, man. 370, 366, 403. You've got the 0.5 specifically right there. That is 7 different data points. Yeah, 7 different data points saying there's a high likelihood we test that level. That's all I'm going to say. Next one is this. No fibs line up. So that's probably the important thing to talk about is that no fibs line up here. It's more so just trend line. So I have significantly less confidence in this. Fibs make a big difference. Fibs make a big difference, but it does make sense in terms of the end of the falling wedge. I think that you're going to be around this little oval around that time frame between 23 November to 30 November ish. I think you're going to be pretty tight in range. And I think you're going to be setting up for that break up, which is really where I'm going to start getting a little bullish is above that falling wedge setup, as long as it doesn't invalidate, which it could, right? It certainly could. But nonetheless, pretty freaking clean. I mean, that's pretty dirty. I want to double check really quick just to make sure there's nothing else that I'm forgetting here. Well, I had all my key claims. Retest 400 in the 200 EMA second time, lower high setup. We talked about that. You'd have to invalidate the falling wedge briefly and then re-enter for that to take place. Less confidence in that than 388, but I still think it's high confidence in the grand scheme of things, considering the fact that that is a 382 bounce, right? You've also got test 388 by Wednesday and then bounce. Good place to establish long. And then end week with more confidence in falling wedge setup. So essentially, just a bouncing back and forth within this range. My third claim would be that I think you're going to set up for this this pretty nice falling wedge, right? That would wind up into the end of November and ultimately push us up probably in December-ish. You know, it looks pretty, I'd say large scale accumulative if that plays out. Short term distributive. That's probably the best way that I could say this. I'd say on the 1 month, 1.5 month time frame, accumulative. 1 week to 2 week time frame, 1 week to 10 day time frame, distributive. You know, this is to me setting up for some markdowns to probably about 387, 388. That does make sense. So that was the weekly, daily, 1 hour time frame in terms of SPY, all the major levels. You can go back and rewind and check them out if you'd like to. DXY, I'm going to keep pretty short and simple. I've just got the daily here. It did catch on the 200 EMA just like we talked about last week. And I've got a short-term target. We got an apex here, right? This is a point of interest. You got a falling trend line. You got a rising support trend line and a fib at the 618 that meets at primarily 108.82. I think this is likely going to happen because it just gives a retest of that breakdown of major support, and then you can push for lower lows, and it ultimately lets SPY cool off a bit, which I think is likely going to happen. I don't have much else to say besides that. That's my target. I think by some point this week, we're going to test $108.82 on DXY. VIX, this is an interesting one because this is a little divergent from the rest of the market. The VIX here actually rejected off the 200. As well as a 382. So I can actually see this just continuing to push down. If there's going to be any reason for an invalidation, this is going to be it. But ideally, for all my thesis to make sense, you really want to see a double bottom on 2236 to ultimately come back up and retest the 200 again. Keep that pretty simple. We'll move into the options market data. The entirety of the week, we're just going to change this up really quick so that it shows more than just 1 day of market data. Let's go 5 days quick. I'm going to show you what everything happened. You got a lot of puts. There's a lot of puts opened across the market, and I would say a net selling of calls coming into the end of the week. And primarily, and probably the most important, is the fact that Delta exposure was red at the close on Friday. Now, I've talked about this before, but in case you're unfamiliar, DEX or Delta exposure is typically thought of as the pricing of the markets. And when you have a huge DEX bar, it means a lot of the market's anticipating a move. When you have a small DEX bar, it means a small amount of the market's predicting a move. When I see huge green or huge red decks, I typically am contrarian. I don't think that's likely to happen. But when you see a small bar, I typically side with that because the market doesn't let everybody win. They only let a small portion of people win. And we have a slight red DEX or Delta exposure where we have a small amount of players who are essentially speculating it will be red by Monday at open. We're going to gap down. And I think that's likely going to happen. I think you're going to get a gap down on Monday. It coincides with the rest of the market data. And it coincides with the daily candle, which was the bearish hanging man. So don't have much more to add, but for that, that's something to keep an eye on. And then Google Calendar, I've got all the major events going on this week. We got Chicago Fed National Activity Index. at 8:30 on Monday. That's the only major event for the U.S. And Tuesday, we've got Fed Manufacturing Index, as well as a couple of speeches, 3 of them by the Fed. Fed Messer speech at 11. You got Fed George speech at 2:15 and Fed Bullard at 2:45. If you're trading on Tuesday, watch for these time frames, because if these guys say something silly, it can move price and that can screw up your trade. So just be careful. Wednesday, you got durable goods orders month over month for October, as well as initial jobless claims for 19 November. New home sales. New home sales is the one that I think will move price the most. You can see SPY move a pretty good amount off this. And then FOMC minutes from November 1 to 2 is from 2 o'clock to 3 o'clock Eastern on Wednesday. This is coming straight from the Fed website. The other data is coming from this website right here, Economic Calendar. If you want to find it, it's just tradingeconomics.com/calendar. And it has actually everything, including the US. And I just picked the stuff that I thought was important, right? Thursday market closed, and Friday market closes early. Closes at 1 o'clock Eastern. So that's all the big stuff. I guess I got nothing else to add. Hopefully that was valuable. And we'll look at everything after that. Hope you guys, by the way, enjoy Thanksgiving. I'm going to be heading to Iowa to hang with my Uncle Mike Monday night. And I'll bring my laptop, so I'll be looking at charts and stuff, but more focused on hanging out with family and just catching up with people. I haven't seen my aunt in a while. My aunt Renee got stage 4 cancer, and she's down to her last couple chemo treatments and is going to make it. So it's going to be good to see her and my uncle. And I'm just going to spend time with them. So probably not much else going to happen. I'll take some trades, and I hope you guys enjoy your week. So catch y'all later. Much love, like taps. Peace.